Well, it's not often that you get to chat with two men who both need no introduction and need no last name. So, Balaji and Dante, welcome. I'm excited. I don't know if there are two better visionaries to talk about the future of finance in the digital asset world than the two of you, so I'm excited for our chat. But I think today, I don't know if there's any conversation happening either on this stage or anywhere where the topic of the US election has not been front and center. No, Balaji, I know in your book, Network State, you talk a lot about history. I think there are times when we know that we're living in a moment of history, whether it's 9/11 or wars or the pandemic. You may have different views. This is the year of the election, but I'm curious to hear your thoughts on what does this moment mean, particularly with respect to the future of finance in terms of the election?
So just confining it to finance, crypto won the election. And so Brian Armstrong posted about that. Gensler's war on crypto is over. It's being repudiated electorally. I think pro-crypto candidates won something like 2-1. So I think we have like 200 pro-crypto candidates in the House now, and I think 14 senators who are pro-crypto, and it's basically like about a 2-to-1 ratio. Sherrod Brown, who is in charge of Operation Choke Point, lost office. Katie Porter lost office earlier, and essentially there's now a very serious political price for fighting crypto. And it's unfortunate that it had to. I think everything is positive sum. I prefer to not have to have a huge political fight, but the fight was had, and crypto won that fight. So I think that is a massive signal for this entire ecosystem going forward. I don't know, Dante, maybe you have some thoughts.
Yeah, well,
you're in the middle of a lot of this.
Yeah, exactly, exactly. Well, I have to live with the consequences. So, despite my honorary status as a fintech ambassador for Singapore, I'm not here for political asylum, because in some respects, Balaji is right. Obviously, the idea that digital currencies as an asset class needed the type of rivalry with policymakers and regulators now shows that there is indeed a political consequence. But like any environment in which you're engaging in scorched earth politics or policy, we have to then be very careful to ensure that we have fertile ground from which to build on the morning after. And so I'm confident and hopeful that an incoming Trump administration will try to figure out how to make good on, frankly, an enormous void of US leadership in this conversation. Here we are in Singapore. The Singaporean government has announced major initiatives that are part of a national industrial policy to compete and export a uniquely Singaporean brand of fintech innovation. And so much of the global discussion, frankly, has not had US leadership at the seat. I've often felt like the unappointed representative of US interests in this domain. And I think that's the space where we can aspire to regulatory clarity, we could aspire to rule of law. And so we nonetheless, despite how challenged and contested this election was, we have to use the scorched earth for fertile ground and build. And I think that's the job that we have in front of us.
Yes, absolutely. It's funny, I thought we were going to be here talking about how immutable ledgers and instant ledgers could help in the election ballot counting, and that we would be waiting, but certainly this was a very decisive election, and so I think you're right. We need to. The decisions have been made, and we need to move on and hope that the U.S. can take that leadership role that we've all been waiting for and hoping for. So I want to switch gears a little bit and talk about invention and innovation. I think of innovation as improving upon something that's already happening, and invention as unlocking something that's new. So if you look, at the internet, you look at mobile phones. They put your computer in your pocket, and that was an innovation. They invented things like the gig economy. If you look at Uber and other travel and other things of the disruption, there's in the blockchain space. There's a story that I'm not sure how familiar you are, but Dante and I are very familiar with, and it's a story of a town in Colombia, San Francisco, and it was a cash society, a lot of unbanked folks, and there's also a very big gun problem, so there were safety issues in getting people paid. Enter an unhosted wallet, USDC, a dollar-backed stablecoin, and a MoneyGram off-ramp, and all of a sudden, particularly the women in this community have an ability to be paid in a safe manner. So that's innovation on how they get paid. what was unlocked, which was probably much more unexpected, was that they then could seek employment overseas. So they're virtual assistants. They are teaching people Spanish, and they're able to get paid. And that, in turn, is bringing wealth into their families and then into the community. And there are more restaurants, there are more businesses. And so this innovation piece is helping to change payments and finance. But tell me a little bit more about what you see as what's going to be unlocked with this digital asset transformation. And separate and apart from the United States election piece, I'm talking more broadly.
Yeah, well, so I'm happy to start. And by the way, the entrepreneur behind this project, Fernanda, just got a $100,000 grant from Circle in the United States in Washington, D.C. At our impact competition, because the innovation is that good. And oftentimes it's easy to ignore the not another wallet issue, but what Decaf got right and what Fernanda as an entrepreneur got right was exactly turning what would otherwise be an abject situation into an opportunity. And so if we're living in Thomas Friedman's hot, flat, and crowded world, then guess what? That hot, flat, and crowded world needs a form of money that is frankly borderless, and that allows the people who are going to build to have little more than a basic internet-connected device and a basic internet wallet to interact with one another. Because the alternative is pretty stark. If you want to stop south to north mass migration of humanity, then we need to create opportunities that are localized. And this is why I think so much of the digital asset personal narrative is about people being able to choose their political economy, armed with little more than the internet that created the democratization of information, and now armed with forms of money and forms of value creation that can create opportunities that are hyper-local. And you cannot do that if to be banked is just about brick and mortar.
Yeah, at the Stellar Development Foundation, we always talk about local builders solving local problems, and Fernanda's a really great example of that, and I think that is the promise of the open networks that reach all areas of the globe and can empower people in that way. So,
well, the way I think about it is something I've said for actually now it's funny more than 10 years is that, and I think it's still true, is that digital currency is good for transactions that are very large, very small, very fast, very automated, very international, very private, and or very transparent. And right, so the more you have something, for example, the typical Starbucks transaction doesn't fit into those categories because it's neither very large nor small. It doesn't need to be extremely fast. It doesn't need to be very automated. There's a human on both sides, and so on and so forth, right? But the more you're doing something which is cross-border, or it's micropayments, or it's crypto crowdfunding, or it's something like what we just described, where you're operating in a zone where maybe the eighth is very secure, right? You need highly secure payments. The more that the entire crypto stack gives you something. And then once you install it and you take the hit of installing it, now you're on the internet of money. And then all those people could make money from other things. Just on that note, by the way, you know, we were just talking backstage about how, of course, the category of software and the internet are not the same, they're not coterminous, but it is true that when you talk about software, typically you're talking about the internet because you're going to need connectivity. And I think that increasingly, as you talk about finance, now you're going to be talking about crypto, because with these last sort of regulatory barriers drop, technologically it's just superior. And so, you know, for example, Square is now renamed Block, and Stripe has done a crypto acquisition, and Robinhood has crypto in its app, and it's going to be harder and harder to find some fintech company that doesn't have at least something with stable coins or some asset trading or something like that. BlackRock is all in, everybody's all in. So, so I think that the distinction between finance and crypto is going to be like the distinction between software and the internet, an important distinction in theory, but in practice it'll be very intertwined, and that's the next 5, 10, 20 years of financial innovation.
Yeah. And yet, I still get the question when I talk to certain government officials, regulators, lawmakers, policymakers, isn't crypto just a solution looking for a problem? Where are we on that answer?
Well, I think, you know, there's lots of things where if they haven't experienced the problems that crypto solves, the better, you know, the more routine their transactions, the less they'll experience those problems. But I think the closer you are to being in the U curve, which are the power user or the powerless, right? That's how I think about the people who benefit from crypto most, right? So the U curve, the power user is trying to push the limits of what a bank account can even do. They're trying to send, for example, they're running Airbnb's backend, and they're trying to consolidate money from 37 different countries in 10 minutes, right? Or the powerless is trying to hold on to a bank account with their fingernails, or they're getting robbed or something like that, right? Those two demographics, sometimes they're the same person, like they're a crypto exchange founder and they can't even get a bank account, right? So they're both the power user and powerless in some ways, right? Which is funny, a common scenario. But the more normie you are, the more towards the mezzanine, you don't see the problems crypto solves. But if you are the developer or you're in the developing world, you see the problems that crypto solves.
Yeah, and so an irony and a direct response. The irony is that by today's regulatory and policy and financial crime compliance standards, if I went to a regulator or a central bank with an innovation called cash for its opacity, its anonymity, and in a pandemic, its ability to spread disease, so much so that some countries actually laundered their physical cash, they probably wouldn't authorize it. And so that's just the one irony. The actual comment is oftentimes, especially stablecoins, and I'll agree that the term is not all stablecoins are created equal, but especially stablecoins have been, for the last 5 or 6 years, reduced to being poker chips in a crypto casino. But even an innovation for payments in a casino is a breakthrough. And now that it's broken out of the casino, in 6 years, USDC went from 0 to 160 countries. Sorry, 190 countries and counting, ostensibly for little more than a basic internet-connected device. And every other incumbent financial institution in the entire world that had a monopoly for financial inclusion goals, financial innovation goals, central banking objectives, couldn't have achieved a network of money movement at that type of scale in that short an amount of time. And we've managed to do so in a manner that completely conforms with the banking system, that not only respects the rules for how money moves around the world, but now has a form of money that is super, super akin to the experience we have had with connectivity and communications with mobile telephony. It's a breakthrough. And so, of course, easy to ignore or dismiss if you were born in the right postal codes and you enjoy perfectly level access to banking and finance. But this breakthrough is not going back you're not putting this genie back in the bottle.
Yeah.
Yeah, and on that topic, one thing you said there that I think is worth just sort of engaging with directly is, let's say that there is an aspect of the lottery economy to crypto, right? Well, guess what? In the US, in many countries, state lotteries fund the state. There's lotteries for Massachusetts and lotteries for New York, Mega Millions, and so on and so forth. Every state has a state lottery, and that's a very profitable business for the state. Now, lotteries don't just fund the state, they fund the network.
All right. I had never thought of it that way. So, see? The visionary.
Speculation as a public good.
Yeah.
Yeah, this is one of the things I've said.
That's not exactly what I...
Speculation is installation. Like, that's to say...
Speculation is installation.
At the beginning of something, it's not necessarily going to work, but you better have a lot of upside if it does, so that to tolerate that flickering probabilistic chance of whether it works, right? You speculate, and then it works, and now you've installed it, and it's solid, and there's less upside from it, but also less downside, right? And it's also the case that speculation is installation within our space, because the speculative upside has people go and put it out there and then advocate to others, and that actually gets the network effect of getting it on millions of devices.
All right. Well, speaking of getting things on millions of devices, I want to shift to decentralization and disintermediation. So we see this. I think people talk a lot about that in blockchain and blockchain technology, but really, if you look at the internet and you look at taxi, you look at travel, you look at a lot of different trends where it's not completely decentralized, but there is a trend towards decentralization and empowering the user as opposed to a centralized travel agent, taxi company, et cetera. There is a continuum. So if you look at real estate, people generally don't go on online and interact directly. They still have an intermediary. So when you look at digital asset space, what do you see today in terms of that continuum, and where is it now, and where do you see it going?
So you mentioned like real estate in particular, and my view is with every category. So here's a maybe counterintuitive or contrarian view. I think that lots of crypto products should be built for crypto people sending crypto to other crypto people doing crypto things. This is contrary to what a lot of folks in the space say, where they say, no, we have to build for normies and what have you. And my view is that normies are almost a phantasm that doesn't exist, and the space of crypto grows by 10, 20, 30 million roughly every year. Over the course of a decade, it's hundreds of millions of people. And those people become more and more sophisticated, similar to how, how many internet normies are there now? Like every year that the number dropped and you had another 10, 20, 30 million people onboarded, and the core user became progressively more and more sophisticated. And so, for example, with real estate, rather than just go and try to securitize some, dorm room somewhere or hotel, I think you would need to have a prospect that feels to crypto people like crypto real estate. Like, what would crypto do if it had access to real estate? What would, it would have to have some kind of crazy upside. It'd be the kind of thing that crypto people would want to go and inhabit. It would be something where it's culturally crypto. It's not just a real estate quote as an asset class, right? And I think that'll be true for every, asset class that you want to put on chain. If it hasn't gone on chain yet, you need to start with the culturally crypto version of it, where people feel culturally familiar with it, and then you'd start there. For example, with oracles, it's starting with putting basically crypto trading information there, right? And it's, the price of XYZ token and ABC token, and it's building the armored cars to transport that information, and only then will it be used for other kinds of news feeds and so on. Go ahead, Dante. You have thoughts.
So look, in my view, everything in crypto is decentralized in spirit until there's a crisis. And in a crisis, it is nice to be able to have, in the extreme, especially if you're an issuer of a stablecoin, some degree of an accountable party. And so my analogy is an airline is a pension liability that flies planes. A regulated stablecoin issuer is an asset liability management company that does universally accessible payments and money movement and so on. And so the part of crypto, though, for which I think this is the hill the industry should die on, and this is the hill that countries and governments and regulators should most encourage, is the part in which you have a developer-first ecosystem and an open source technology standard at the core of the shareware activity. So public blockchain ledgers, the huge debate amongst the central banks, the banks, and the non-banks, I've won a few of them in Singapore, is about, well, whose ledger is better? And if you already have, and that's like saying I want an intranet and an extranet versus an internet for the way I move my information. That's the part of crypto that I do think we should fiercely defend. Constantly upgradable open source infrastructure, Stellar is a great example, that allows anyone anywhere to plug in. Because so much of the traditional infrastructure, especially if we're talking about finance, is closed, it's proprietary, it's labored under single source of failure vulnerabilities like credit bureaus in the United States or antiquated technology. And I think that part we've demonstrated unequivocally in the last decade, that the crypto economy can in fact bring to scale ledgers that can ledger trillions of dollars of activity safely, instantly, soundly for the entire world.
Yeah, my view is almost every space. So first is I believe in decentralization as a tool, and sometimes that's the right tool, and centralization is the right tool, and sometimes some combination of them is. And I also think that many spaces partition where you have a centralized Apple version and a more decentralized Android version, and that's a natural tension between two spaces. Like, I think in 10, 20 something years you have China and you have the internet. And those represent two different models, which will both have an internal philosophical consistency, and they'll compete on the margins, just like Apple and Android do. And another example is like Apple and Windows. Another example might be the Vision Pro Apple headset and the Meta Apple headset, right? And so I think that, depending on your vantage point, right? If you are the CEO of a company, or if you're a user who wants something to just work, then you want centralization. If you are a developer, if you're a power user, if you want extreme stability in an application, you want something to just not change, right? Then you want decentralization. And sometimes it's totally reasonable to actually want both a centralized and decentralized option. I want Apple to exist, and I want Linux to exist, and I want to be able to go between them at times. So I think sometimes you want a superposition of those, right? So I think that somewhat levels up our conversation on this, because often partisans, in a sense of one or the other, don't admit the utility of the other.
Yeah, absolutely. I love the both your you earlier and this. Like, there's no one or the other. It's not we're all in a completely decentralized world or we're all in a centralized world. You pick the right tool for the job. That's something my father taught me at a young age, and I think it's true and applies to so much of how we operate in the world. And so,
yeah, I was just
Dante,
going to add a
like
quick point, because I think Balaji really underscores this general premise of optionality matters.
Yes.
And so I don't take a maximalist position on anything, except for this. Crypto might not be right for everyone, but everyone's rights to participate in something for which they themselves choose to accept the risk of technological novelty, behavioral novelty, and so on should be protected. That's why, candidly, this crypto-powered US presidential election is in some ways a uniquely American response to policy entrenchment that protects incumbents. We will look back and this will feel like America's Brexit, but in some respects, the technological drive to unlock innovation, to unlock creation, and to go back to the days in which we could build stuff really does matter. And we lost that spirit due to technophobia, not just in the US, but around the world. And we need to figure out how to unlock it, because there's so many things you and I cannot do if the way we do things is stuck with status quo.
So, on that point, actually, after the 2008 financial crisis, there's a really good graph that shows that the number of new banking licenses issued basically cratered to almost zero over the next ensuing decade or more. And essentially, the harsh regulations on the banks after 2008 essentially was they rewarded them. It was a coronation disguised as regulation, right? Where essentially they said, oh, you've been so bad, so we're going to completely make it impossible to compete with you, and kind of enshrine the current folks in place. And so the technological response to that with the network was fintech on the front end, blockchain on the back end. You had fintech companies that would say, all right, we can't get a banking license, but we can make this really slick, web UX layer, right? Like what Stripe and Square and others did, right? And then you had blockchain on the back end, which was just totally going into reinventing the debit and credit itself, because you can't get a banking license, fine, but we can reinvent what banking even is, right, on chain, right? And now those two threads are kind of linking up, where you have a fintech front end, blockchain back end, some of these new stablecoin powered apps and stuff like that, neo banks, et cetera. And so I do think that's a American internet-based response to that regulatory stasis, and now we have choices for people, and if you want your bank, you can keep it, right? Like, but now we have options, right?
Yeah. So you've made a number of references to regulation. Obviously, there's a patchwork of regulation around the globe. I know that you both are familiar with that. We're in a new moment in the United States. I think there are a lot of people thinking about what that's going to look like. But given what we were just talking about, the decentralization and pieces are centralized, like, is it regulatable? Is it something we're trying to?
So in my view, especially if you're a stablecoin issuer, I just want to cage this in the category of regulated internet money. Then if you are unregulated, it's because you chose not to be. And for many, that may be the feature, not the bug. USDC complied with, when it was launched, deep co-creation and deep partnership. Balaji was in the room when this was done. When it was launched 6 years ago, guess what? We conformed with US state-based money transmission law. We registered with the Treasury Department as a money services business so that no one would accuse this brand new product of promoting illicit activity, so that you exact a penalty on the countries that could afford it the least for basic financial access, which is a human right. When the Europeans created the Markets and Crypto Assets framework in response to my former project, that shall not be named, guess what?
Maybe named.
Circle was the first company to go to France, not exactly a domain for regulatory arbitrage, to be the first company with both a euro and a dollar regulated for all of the European market under MiCA. Here in Singapore, the major payments institution license enables this activity to be brought onshore. And so my concern, however, with regulators is if you also want to have these innovations be a part of your economic competitiveness strategy, then you cannot create rules that only a circle can follow. You need to create rules that allow Fernanda with decaf to build a business.
Absolutely.
And that's where the regulators are a little too heavy-handed. I would encourage the regulators who might be listening, principles over prescriptions, and risk-based approach that allow entrepreneurs to figure this stuff out over incumbents locking everybody out.
And this, by the way, this is enlightened self-interest, because if Circle, if Coinbase, even though I don't speak for Coinbase anymore, if we were conventional corporations, you'd want to lock everybody else out, throw away the key, embrace regulatory capture and so on. But we actually do believe in financial inclusion. We do believe in opportunity. We do believe in allowing others to ascend the same ladder that we did.
Yeah.
So.
All right, we need to get to the future. And, first we'll take 5 years ago is when I joined this space. It was pre-pandemic. Work from home was the exception, not the norm. Libra had just been dropped, the white paper. I started right when that happened. And perhaps at the time, the realm of the possible was, many believed, maybe one of our guests here believed, that the realm of the possible was captured in that paper. Now, of course, that Libra is named, but no, it didn't happen, but dramatically changed what the future of finance was starting 5 years ago. So if we start now and we look 5 years ahead, what are the things that we should be looking at? What are the innovations? I've been listening to AI, quantum. What are we not thinking about that we should be thinking about in the realm of the possible for the future of finance?
Sure. So I think a few things. First is zero knowledge base layer. So I think zero knowledge is one of the more underpriced technologies globally in the sense of mind share relative to its importance. It essentially, Vitalik and I were talking about how zero knowledge is to crypto what the transformer is to AI. That is to say, it's just this paradigm shifting technology where it makes encryption programmable, lots of primitives become programmable. What does that mean? I think one opportunity is a Ethereum or Solana or USDZ where but especially Ethereum, Solana, essentially a chain where zero knowledge is at the base layer. And there's things I've funded, things I'm looking at, and so on that are doing that. That doesn't really exist yet. That has the privacy guarantees of a Zcash or a Monero. Well, actually, Zcash is really better, but the programmability of an Ethereum, right? So that's one big thing. Just basically zero knowledge first. And what that lets you do is it lets you have the best of both worlds, where you have all the identity checks you could possibly need, with all the privacy you could possibly want, right?
Yeah.
And that seemingly insane balance between the two is actually possible with modern technology. Okay, that's A. Number two is, I think now that we can actually, due to Solana, due to Base or other things, you can just blast payments on chain at very low cost. That plus the rise of AI means machine-to-machine payments are back. And there's some experiments like this happening on Twitter, AI bots that are kind of trading back and forth, and I think that combination will be really interesting. And the third is, people will say AI and crypto in very trivial and buzzwordy ways, but I've got a talk which is AI makes everything fake, crypto makes it real again, where basically these are very complementary technologies. AI is probabilistic, crypto is deterministic. AI synthesizes, crypto verifies it, right? And so lots and lots of things that are going to become fake with AI, you're going to rely on the hard guarantees of crypto to show that's a real human, that's a real transaction, that really happened at that time. Crypto is, ironically, the only thing that's not a scam. It's the part that you can trust in a world where everything else is faked or what have you.
Yeah,
right?
the trust anchor for AI.
Yep, so those are three thoughts.
All right, Dante?
Yeah, look, given the small balance of time that is left,
Yeah.
all I will say is in order to understand the future of money, the past is prologue. And the most important currency we could trade in is trust. And the second most important thing we could encourage is risk-taking and innovation.
All right. Well, I wish we had way more time, but this was fantastic. Thank you so much. And we'll see how those predictions go. We'll be back.
Thanks.
Thank you, Candace.
Thank you.